What's up, everybody, and of course, welcome back to Ziwa FX, of course, TV show. If you're new to this channel, hey man, just leave a like, leave a comment, let me see what you think about this video. If you're newbie in this video, if you're new to Forex, just leave a comment and leave your location where you're watching this video from. I'll have a shout out and see what I can give out to my best students. And by the way, the first video I made for the forex beginners, I was like, if we, like I gave you an assignment, like after watching the candlestick video, make sure you go and do research on specific candles like engulfing candles. But no one came up to me. Anyone who was going to come up to me was going to win himself 50 easy dollars, but no one came up to me. So if you want to make money in trading forex, you have to get serious and of course research and do something for yourself and come to me if you have any issue. I'll be able to reply you and of course help you. And in today's video, we're going to talk about something very powerful: risk management. How to calculate your risk, how to calculate your pips, how to know how much you're going to lose in every trade. Even those who are trading forex already, most people even don't know how to do this. So as I told you again, if you're beginning trading forex, the most important thing is if you don't know what we call risk management, there is no way you're going in trading. So I guess this video is very powerful for you. How to calculate your risk, how to know how much money exactly you're going to lose, and everything. You get that? So the first thing is, of course, don't forget to leave a comment and of course subscribe, hit the notification bell so you don't miss most of my videos. And of course, check my description and join of course the Telegram group. And don't forget this video is sponsored by Access. Click the link in my bio and of course open your trading account. And let's go straight. I'm gonna open a chart. So these are my candles, these are my pairs, and you see today is a Saturday. And you know on Saturday the forex the currency markets are closed. Okay, so the currency markets are closed. They're always open from Monday up to Friday. So we shall open trades on Bitcoin, okay, which is a cryptocurrency. So if you're new to this, if you're new in forex, you can see like if you try to sell, they say markets are closed because it's a weekend. You get that. Now I'm gonna show you directly. This I just posted on a demo account, so I can be able to show you exactly how to do this, how to calculate. Okay. Now if you see right now here, I want you to see there. Okay. I think let me mark. Okay, just a minute, guys. I'll do something small. Cool. Okay. So if you see this, are you seeing that price? So that is our current price right now of Euro USD. Okay, that's our current price. So if I'm to do this, if I'm to mark this is my current price. Okay, you have to learn how to use this. You just come to shapes. Let me increase the width so that I can be 3 pixel. Done. Okay. Now that is I'm marking that as my current price. Okay, that's my current price. So let's say our current price is, it's like not even, let's say that's our current price 0.98, 0.98 here, 0.9801. Okay, so the first thing that I'm going to teach you is I'm going to teach you what to call how to count pips. What is a pip? PIP. A pip is a single unit of measurement. We use pips to measure the amount of money you're either going to make, or the money you're targeting, or let's say your trade is running at a profit. Instead of saying that, hey man, my trade is running at a profit of $100, you can say my trade is running at a profit of 100 pips. That's how you confuse people who don't know forex. So you have to learn a pip is a single unit of measurement. You get that? Just like when you're calculating distance, okay? We don't say that we don't start like maybe tying something and say that the length. What we use meters or centimeters. So that is how a pip means in forex trading. I hope you understand something, guys. Now let's move on straight away. So I want to give you an example. Let's say like if this is our price right now, which is 0.9801. Make sure you always have your calculator. You can see I have my calculator there that I'm going to be using. So that is the current price is 0.980113. Okay. I'm first going to begin by teaching you how to count pips, how to calculate pips, and how to know how much money you're going to be losing in each lot size that you're going to be using. Okay. And also I'm going to teach you how to take trades and how to set stop loss and take profits. Okay, after counting the amount of money you're gonna lose. Make this video is very important for you as a beginner, or maybe if you're a pro trader and you're still suffering with risks, how to calculate your risk. Now that's our price. And let's say that we are expecting price to sell. Since we're expecting price to sell, I told you that when you're expecting price to sell, what do you expect? You expect, of course, price is going to fall down. If this is our initial price, our price now, and you're expecting price to fall down, of course you will put your sell at this point. You'll open a sell, okay, and price you're expecting price to move up to here. Meaning here will be your take profit because that is your target. Then your stop loss should be, let's say, above here because you don't expect price to move this way because you're expecting a sell. When you're expecting a sell, you expect price to move down. Okay, cool. Now let me say here 0.97742 is your target profit that you're expecting to make. Then your initial, then your real price, the price of the market right now is 0.9815. So I want you to know how much pips are there from from this point up to this point. How much pips? How many pips are there? So what you have to do is you do one thing. I'm going to give you a very simple formula, guys. Very simple formula. You see this price here, 0.9814. Okay, you just ignore the last four, ignore the last digit. Let me even rub off. Then, of course, ignore the last five. You get that? Okay? Now, what you're going to do is, because you're now going to only consider these four digits 9801 and 9774. Okay? You get that? So, what you're going to do is you're going to subtract because you're expecting price to drop. You get that? You subtract this from this. Then you will be able to know the amount of pips. So what is it? 9801 and 9774. Okay, just a moment. Sorry, guys. 98, it's what? 9801 9774. I'm making videos so late, so make sure you subscribe, guys, to motivate me. 9801 minus 9774. So that is 27. So meaning you're targeting from here, meaning from here up to here, it is 27 pips. That is really very easy. You see how it's easy to count pips? Let's again give ourselves another easy one. So let's say Miles, let me mark that. Let's say that's the current price of the market. Okay? And you're expecting price to fall up to, you're expecting, you want to sell and you expect price to fall up to that point. Okay, you won't sell. So this is your difference in price. Sorry, you're expecting price to fall up to this point. This is your current price and you're expecting price to come up to here. So this is your take profit because you're selling, you expect price to fall down. Now what I told you is very simple. Ignore the last digits, the last digits, the last seven, ignore it, and also the last two in this point, ignore it. Okay, so you're going to only take 9787 and 9764. But since the first two digits here are the same, 9797, we also ignore 9797. Then we only take 87 minus 64. Hope you've understood something, guys. I said like this. Let me repeat again. Since 9787 and 9764, the first two digits 9797 are the same. So we ignore them. Then we only take 87 and 64. Then we subtract 87 from 64. What's that? 87 minus 64. What do you get? 87 minus 64. You get 23. So what does that mean? It means that from here up to here is 23 pips. You get that? So it therefore means that if for you're selling from here, you see you've put a sell order from here and your take profit is here because when you're selling, you expect price to fall down. Your take profit here is here, meaning you're expecting to make 23 pips. Okay? Now we are going to reach a point where we say like if you're using a losses of 0.01, if you're using a losses of 0.02, we are moving slowly by slowly. So let me give you last two examples of buy. Okay? Last two examples of buy. I'm just showing you how to calculate pips first. Okay? Now let's say like this. Let's say like this. Okay, Miles, this is your price. This is the price in the market right now. 0.9742. But according to my analysis, I'm expecting the price to buy, okay, to move up. So meaning I'm going to put my buy order from here, okay? And of course, let's say my take profit is somewhere up here, like I expect price to move so far up to this point. That's my take profit, okay? So what am I going to do is this, okay? So this time I'm going to show you how to put also how to calculate stop loss, take profit. So this way, let's say this way your take profit is. You want to know how many pips are there, okay? Cool. So let me mark where my take profit also is. Let's say I'm expecting price to come up to there. So now it's just very easy. The same thing, guys. Ignore the last digits. Okay. Then we have 97.42 and 98.48. Let's subtract them and we shall know how many pips are there from here up to here. How many pips you'll be planning to make. You get that? Now let's go straight away. 97, 90, 98.48. 98.48 minus 97.42. 97.42. Wow, that is 106 pips. Guys, you're expecting to make a lot of money in that market. Now, you're expecting to make 106 pips because that's from here up to here. That's a lot. Good, and that is very good. Now, since you're expecting price to move up, you're going to set your take profit here. I'm going to show you how to set take profit and how to set stop loss manually. Okay? Now, so in trading, you only don't set your take profit, you also set your stop loss. And always I advise you that your stop loss should always be smaller than the take profit. Because what you're expecting to make should always be bigger than what you're expecting to lose if anything happens. Now let's say that okay, since miles, I have predicted that this price can buy. I've predicted that it's a buy. Like this, my initial price is 0.9742, and I'm expecting price to buy, and that is this way I'm going to put my take profit. Where are you going to put your take profit? This is your take profit, and we have already calculated how many pips are here. From here up to your take profit, 0.9848 is your take profit. We calculated the number of pips to 105. Now let's calculate the number of pips, the number of pips for the stop loss. Now let's say that since you're expecting price to move up, let's say you're willing to risk from here up to here, okay? Or let's say like this. Okay, me, I'm only willing to risk 20 pips for 107 pips. So what you will do is very easy, guys. Very easy. Very easy. I'm gonna show you something. I was just showing you how to calculate how many pips are there from here up to here. Now let me give you. Let's go to another point. Now we are moving to another logical point. Let's say you want to what? Let's say you're taking this buy trade, but you're only willing to lose 20 pips. This is your price. Okay? You're only willing to lose 20 pips. So since you're expecting price to move high, okay? Meaning the price is going to keep moving high. You can see here is 97 and this way is 98, the first two digits. Meaning since you're expecting price to move high, meaning your stop loss should be behind. So let's say you're willing to lose 20 pips. So what you do is very simple. You take this 42 again only and you subtract 20 pips. When you subtract 20 pips from 42, you get 22. So it will be 97.22. That will be your stop loss if you want to risk 20 pips. Let me come again. I was just showing you how to calculate pips. Now let's go straight away. Let me tell you this, guys. Let's say this is your current price. If that is your current price, and let's say you're willing to lose 20 pips only, okay? So if you're willing to lose 20 pips from your current price and you're expecting price to buy, you're expecting the price to become strong, high. So meaning you're going to subtract 20 pips from your current price, which is this. That's an example of our current price we're giving. So what you do is you ignore the first nine, the last nine, and the last two digits, and subtract only 20 from 42. Subtract the number of pips you're willing to lose. If you subtract that, will be 0.9722. Very easy. Now let me show you again something. Now let's say again, let me give you another example. let's say this is our current price, okay? And we expect price to fall down. I expect price to fall down. If I expect price to fall down, meaning how price is going to be, we are going to sell. Let's say we are selling, we are going to sell. Now let's say, okay, I'm selling this price from, and this is our current price, and I'm saying that, okay, since I'm selling this, I'm only willing to risk 15 pips. So things I'm selling and my stop loss is now going to be above this. So because I'm opposing the direction, like stop loss always opposes your direction. Let's say you're selling it and your stop loss now should be behind this side. Okay. So now your stop loss, you're going to add 20. Let's say your stop loss you're only willing to risk 15 pips. So meaning you're going to add 15 to 14 only here. Why are you adding, not subtracting? Okay, when you're taking a sell trade because you're expecting price to fall down, it means you're going to add the stop loss. When you're taking a buy trade, it means you're going to subtract to get the stop loss. It's just the reverse. You get that? I said when you're taking a sell, price is going to drop. If price is going to drop, meaning your stop loss is going to be behind, which is above. So you're going to add at least any pip that you want to lose. You get that? Now let's go straight away and we calculate the number of pips in every lot size. And I told you a pip is a single unit of measurement. Don't forget it. Now you've known how to know how many pips are from this point to this point. And you've also known how to calculate and know that, okay, I want to lose 20 pips. What will be the price for 20 pips? Because when you subtract, you will get the price for 20 pips. When you add, you will get the price for 20 pips. And I've told you when you're looking for a sell and you're selling and you want to look for your stop loss, you'll always keep on. You know what to do, guys. Just make sure you watch the video and understand everything. Now, so let's go straight away to what? To taking a. So since the markets are closed, I'm only going to open a trade in Bitcoin because Bitcoin works on weekend. You can open any trade. Now, let's do one thing, guys. So when you come at this step here, let's say you want to take a trade. So this is where you set your lot size. A lot size is very important because it determines how much you're willing to trade with. It's like how much you're willing to trade in the market with. You get that? I hope you understand that. Now you can set your stop loss to 0.01, 0.02, depending on the amount of money you have, because I'm going to show you how much you're going to be losing in each lot size in every number of pip. Okay, that is where you put your lot size, and where you put your stop losses is there, and where you put your take profit is of course here. Okay, now let's say since there are so many people who don't know how to take a trade, let's say if I take a trade of 0.01, okay, what does it mean? Okay, how to just take a trade? Let's say I'm selling, okay, you just sell. You see, if you have activated, and let's say I'm buying, it's just buy, simple like that. And you can also change to any lot size you want. Okay, now the question is very, very easy. I was just showing you how to open a trade there. Now I'm going to show you how to set a stop loss. Okay, now let's say your stop loss is here. Okay, sorry for that. Let's first take one in one. Let's say I'm fast selling. Let's put a stop loss for sale. Since I'm selling, I'm expecting price to, of course, drop down. So my stop loss is going to be above the real price. Sorry. Since I'm selling and you see the current price, okay, just a moment. I'm like, since I'm selling this trade and this is our current price. You can see this. I'm expecting price to fall down. Okay, I'm selling it. So my stop loss will be above. Any point, let's say my stop loss is here, 19,357. Okay, so let me set my stop loss 19,357. You just come here, you just hold it for a while, then you go to modify order, then 19, you write that stop loss 19,387. Click on it. It has already modified. I think I didn't write the right digit. Let me write again. Let's say our stop loss is 19,354. 19354. Come to modify 1935354. Cool. Now when you see the red line here, it means that is your stop loss. What does it means? When price reaches here, your trade will automatically close and you lose the number of pips. You get that? Now, so you have seen how to put a stop loss. Now let's say our take profit is down this way, is 1991. So take profit again, you also set this way, you put your take profit 1991. 1991. Very simple like that, okay? I don't know how many minutes we have already spoken for 20 minutes. By more 10 minutes we will be done, okay? So that's how you set. You see even the take profit, you see it has written here TP meaning take profit, and here it has written SL meaning stop loss. Hope you've understood that, okay? You can see that. Now let's go to, you can zoom your charts the way you want, but you'll learn this as you're trading forex and perfect yourself on how to do analysis, okay? Now we are going to teach, I'm going to teach you about something. What does every lot size represent and how much does it, how much are you going to lose? And I'm going to show you how much cash in real cash. So which one was I was using Euro USD? I just love Euro USD. Now let me erase my that and we go straight again. Okay, now assuming this is your current price, yeah, not even assuming, this is the current price of Euro USD. Okay, the current price of Euro USD is 0.9813. This is the current price of Euro USD. Okay, now let me give you one example. Let's say I'm selling. Okay, when I talk of I'm selling, it therefore means that since I'm going to sell, let me say a sell, so I'm expecting price to move up to here. So let's say my take profit is going to be here. That's where my take profit is. Okay, and let's say my stop loss now is going to be behind it because I'm selling. I don't expect price to reverse up to that point. Okay, good. Now I think I should use a different color so that I don't confuse you. Let me use this for that. So stop loss we are using something like green color because we are expecting, we are selling it. Then red 0.9707 is the take profit. Now first thing is we are going to calculate the pips in each price. Let's calculate the pips that we are going to plan to make from here up to here. These are the profits which we calculate them in pips. We also calculate the pips which we are expecting to lose from this price to this price. Now let's do that. Now let's first begin with the take profit. I told you what you first do is you first forget about the last digit, which is 3 and 7. So you're going to subtract 9801 from 9707. Okay, the take profit. 9801, let me first do that. 9801, 9801, subtract. Take profit is 9707. 9707. So now we are going to be making, our take profit has 94 pips. So if this trade goes well for us, we shall be making how much? 94 pips. Isn't it? Was it 94? Yes, 94 pips. We shall be making 94 pips if this trade goes well for us. But if the trade goes against us and hits our stop loss, remember when a trade hits take profit, it closes automatically, meaning your profits will be closed automatically. But if the trade hits stop loss, how much are we going to lose? Meaning we shall of course subtract, of course, 9827 minus 9801. But these 98 and 98 are the same. We just subtract 27 from 01. So we have understood that. And what is that? 26 pips. So meaning you lose 26 pips, but you're planning to make 94 pips. This is a good ratio. We call it a good win to lose ratio because you're planning to make big out of risking small. Okay, because you're risking only 26 pips, planning to make 94 pips. Hope you get that. Now let's say like you're going to use a lot size of which one. Okay, let me take a break, guys. Okay, I'm back. Now, let's say you see it's very late in the night. I sort of making this video. Okay. Now let's say uh, let's say things you're planning to make 94 pips. Let's begin with the take profit. Okay. So and you're using a lot of 0.01. You're using a lot of 0.01. Now, when you're dealing with a lot size, it's very easy. If you're using a lot of 0.01, we are beginning with the smallest lot size 0.01, and you're trading in dollars, of course. You first remove this one and shift this one to one decimal place. What will that be? It will be 0.1. So when you have 0.1, to know the amount of dollars you're going to lose, you're going to make. So you're converting 94 pips to real cash if you're using 0.01 lot size. I told you first remove this one and shift it to one decimal place. Then you have now 0.1. Okay, so you multiply 0.1 here, multiply by 94 the number of pips to get the real amount of money you're going to be making. So let's multiply 94 times 0.01. 94 times 0.1. So meaning you're going to be making $9.4. So if your trade goes well for you and you're using a lot of 0.01, you're going to end up with $9.4. Now let's say like this again. If the trade goes against you and our stop loss had 26 pips and you're using a lot of 0.01, how many how much amount of dollars are you going to be losing? So what you first do is you first move this one to again one decimal place, which is here. That is 0.1. You multiply 0.1 times 26. You will get what? You will get $2.6. Meaning you're risking $2.6 to make $9.4. So you've now known how to convert pips using 0.01 lot size to how much money you're gonna be making, how much money you're gonna be risking. Now let's go to the next example. We are using only this example. Let's say you're using a lot of 0.05. It's the same thing, guys, and you're targeting 94 pips. If you want to know the amount of money in 94 pips, you move this 5 to one decimal place. It becomes 0.5. I'm teaching you the easiest way that no one knows this way. 0.05, you multiply by this 94 again to know the amount of money. Okay, now we come to 0.5, 0.5 times 94. So meaning that's a big lot size, you're going to be making $47. You get that? If you're using a lot of 0.05, you're going to be making $47. Now, the same thing happens to calculating stop loss. You just shift 0.01, 0.05 to one decimal place, then you multiply by 26 pips, which is for your stop loss. Now, let's go to the second. Let's say you're using a lot size. You're now going big. You're using a lot of 0.10 now. Okay, something that is already in one decimal place. You again still move it to one decimal place. When you move this to one decimal place, it will come here. So it will only be 1 times 94 pips which you're willing to make. So that will be $94. So you can now see that the more that you increase the lot size, the more money you're planning to make. And also the more money you're planning to lose. So meaning the more you increase your lot size, your amount in your account should also be more. So let's say you're using a lot size of 1, only 1. That's a very big lot size. 1 lot size. So what you do is when you move to 0, when you first remove it to one decimal place, it will be 0, 1. Still, that will be 1. So you just get that 1 times the 94 pips. So meaning you'll be planning to make $94 and you'll be planning to lose $26. So meaning the more you increase the lot size, the more money you risk and the more money you plan to make. But of course, brokers are very wise. You can't just open a very big lot size. You can't just open a very big lot size when you have very little money. You get that? So in the next video, I'll teach you about leverage when you're opening an account. Okay? Because I didn't really make a very clear video about opening an account. If you loved this video, guys, please share to your friends who are new to trading forex. Of course, I want to see your comment there. I'll reply you and I'll see anyone shout out. If you win my question, then you get yourself some free dollars. So, guys, I wish you all the best. Let's catch up next time. I hope you've understood risk management and I will still make another video about candlesticks. Okay. And the next thing is I'll again repeat about opening and trading accounts. Hope you've seen how I've opened my trade, how to open, buy, sell, how to put stop loss, take profits. I've taught you today how to know how to know if you want to risk 20 pips, how to calculate and know the price of 20 pips. All that, how to know how much money you're gonna be losing. So guys, see you next time, guys. I wish you all the best. Bye. I'm ending this video.